Welcome, everyone, and thank you for joining us today. My name is Gina Smarecki. I'm the events manager at Newspire, and I'll be your host for this live session. Cyber insurance has evolved, and many security professionals have questions on what it covers and how it's administered. We're really excited to introduce some industry experts and share answers to the top 5 questions from CISOs on cyber insurance. We have a little something fun with Mother's Day coming up. We will be giving away gift cards to 5 lucky registrants to send flowers through 1-800-Flowers.com. So be sure to watch your email, and I'll be notifying the winners in the coming days. If you have questions for our presenters today, please pop them into the questions tab on the right side of your screen, and we'll have a Q&A session at the end. At this time, it is my great pleasure to introduce you to our speakers today. Louis Dunsworth is the CEO at Newspire. As a former CISO with over 20 years of experience in information security, he's a visionary leader focused on innovating technology and the constant enhancement of service delivery processes and helping clients achieve their expected outcomes. J.R. Cunningham is the Chief Security Officer here at Newspire. He's an innovator and premier thinker in cybersecurity and risk management. JR has performed executive consulting, architecture, and assessment work across the globe and in a wide variety of industries. Joining us today is Ethan Harrington. Ethan is the founder and principal of 221B Consulting and is responsible for all operations of the company. Ethan has a reputation as a creative groundbreaker, designing and developing and implementing complex corporate insurance, enterprise risk management, crisis management, and business continuity solutions. And certainly, last but not least, we have Mary Roop. Mary has over 15 years of insurance experience. She is responsible for the renewal and replacement of professional liability, property, and casualty policies and programs. She's also responsible for assisting companies with the renewal of cyber and D&O programs. All right, before I turn it over, we have a quick poll for you. If everyone could click on the polls button on the right side of your screen, the bottom right corner, please cast your vote here. We'd like to get a feeling for how confident everyone here is in your understanding of cyber insurance. We'll give everyone a moment here to submit their votes. See a bunch of people voting. Give it a few more seconds. And it looks like we have a good number of votes. So I'm seeing about 45% somewhat confident. And only very confident, 13%. So we have a good mixture here. And I'll turn it over to Louis to comment a little bit about that at this point.
Yeah, I don't think there's really anything there surprising. I think it's one of those topics that even for someone like myself that's been around it for about 15 years or so, that it has changed quite a bit, which I'll talk about here in a little bit. But I think for the most part, it's one of those topics that as much as it's evolved and how complex it is, it's almost imperative that you're somewhat humble on the topic because it is can be very confusing and a bit overwhelming to a lot of people. So hopefully through the course of the presentation, you guys will get some good information and a lot of good nuggets to help you navigate the landscape, so to speak. All right, so let's jump into it. I thought I'd spend a few minutes to talk about how did we get here. It's if I go back about 15 years ago, as I spoke, Ethan and I actually put together one of the first cyber insurance policies at H&R Block at the time, and probably most likely one of the first in the Fortune 1000. It was fairly new. A lot of people were still trying to figure things out to a certain point. But at that time, cyber insurance underwriters were asking really basic questions like, do you have antivirus? And today it's much more complex. They're now hiring cybersecurity experts to ask questions like, how many privileged users do you have in your environment? How many service accounts? Have you remediated the high findings on your penetration test? They expect businesses to improve and to become more secure over time. And frankly, that really hasn't happened. So we got to ask ourselves why. Why hasn't that happened? Well, cyber criminals have really matured their approach to stealing, while our industry and businesses have not really matured their security programs at the same pace. From constant changes in leadership and the changes in strategy, the cyber skills shortage, technology sprawl in organizations. We always think a new piece of technology is going to solve all of our problems, and it usually never does. And a multitude of regulatory and compliance requirements. Because of that, it's difficult to balance what you have to do, what you need to do, and what you want to do when it comes to your security program. So what has been the impact? Well, frankly, it's given the cyber criminals time to build new tools like ransomware and this is an important part, the infrastructure to actually monetize their illegal activities. We used to talk about the value of an identity or PII or credit card value on the dark web, but there really wasn't always a one-to-one, you get hacked and then you feel the pain. But however, today, the pain is somewhat immediate. You either pay for the ransom or you won't be able to serve your clients. So you got to take a step back and say, well, knowing where we were at and how we got to where we're at today, how has it impacted the cybersecurity insurance industry? Well, cyber insurance providers have seen their risks go up. The payouts have increased, both size and frequency, and they're really struggling to find a clear answer on how to move forward. CISOs, and I used to be one of them, we all know that we need cyber insurance to hedge our risk, but it's a balance between spending dollars on closing gaps versus paying for that insurance. And in general, we're having a hard time keeping up with the criminals. So that gives us a little overview of where we were at, kind of the lineage on how we got to where we're at today. I wanted to kind of come full circle and say, as you just, a lot of you answered in the poll, there's frankly a lot of confusion on the topic. So our hope today is that the content will help lift the curtain a bit and shed some light on the problems, the trends, the state of renewals, incident response, and just general education on the topic. So we're definitely looking forward to the conversation and would love to hear any questions that you all may have as we work through the presentation. Keeping in mind, this is all for you more so than it is for us. So by all means, let us know what you got. So with that being said, we'll move on.
Thanks, Louis. Wanted to share a little bit about, as Louis mentioned, kind of how we got here. What really drove this issue home for those of us that provide services in the security industry is that our clients really started to feel some of the effects of what's happening with the changes in the insurance industry. And of course, they're looking to us as a service provider. They're looking at their cyber security consultants. They're looking, out into the world to see where they can find help. And we really saw some events start to repeat themselves, such as notices of non-renewal, things that never used to happen before, like the cyber insurance carrier scanning the network of a client. And if they find a service they don't like, threatening to cancel their policy if they don't close that service down. deeper questions. The insurance exercise once a year used to be put the check in the box for the renewal. Maybe you'd get some questions from the risk department or the legal department. Hey, do we have cybersecurity in place? And yes, absolutely we do. Hang up the phone and all right, I guess I don't have to answer that question for another year. And that really all of a sudden began to change when insurance, both brokers and carriers, started to ask much deeper questions about not only what's happening in the security program, but the effectiveness of the controls that are in place, and can you show me that what you're doing is working? So really, the problem space has become one where that's not just an annual exercise. Obviously, cyber is more expensive. We're seeing terms we never saw before as security practitioners, like sublimits for ransomware, that we, of course, when we first see some of these terms, wait a minute, this is new here. And then really some business impactful things that Ethan and Mary will get into in a moment here regarding waiting periods for coverage and more aggressiveness on the part of the carriers, as I mentioned, on their expectations for security. So really, just like privacy, this became an issue that wasn't really part of the native vernacular of the security practitioner that we've now really had to get our arms around for the business, or for, in our case, for our customers that we provide services to.
So I think we're ready to dig in on the next slide and discuss what is cyber insurance. And as JR just said, the vernacular within cybersecurity, there also was very limited vernacular within the insurance world of what is cyber coverage, what is cyber insurance, and how do we really address it. And we've got the definition on the page. Don't want to spend a lot of time draining this slide, but the important parts that we want to talk about is that it's not only a cyber attack, but it's any tech-related risk that has a consequence, whether or not that is ransomware, whether or not it's cyber extortion, whether or not it is malware. Those are all potentially covered underneath a cyber policy. And it's split into two parts. First party costs, which would be the costs associated with data restoration or payment of the ransomware. So it's really the individual business that has actually had that consequence. They're going out to spend a lot of money to respond to that. And then you've got third party costs, which what Louis talked about with PII and how much can you actually buy out on the dark web. That was what was traditionally covered underneath a cyber policy, was more about the threat of how much are we going to pay for others due to that liability that we cause to them. We'll talk a little bit about the history here momentarily, but at the bottom of the slide, we really wanted to point out the coverages, and this will be important as JR talked about, sublimits and subretentions and everything else within the insurance world that's extremely difficult to try to delineate and to define. Some of these coverages becomes very important because it is not like a cyber policy just says anything involving a cyber claim, it's covered underneath this exact program, underneath this exact limit. And if you have a claim, just let us know. You have to determine what coverage is it actually coming from, to then make a determination of what type of limits, what types of retention, and what sort of sublimits might be applicable for that actual program. So a little bit on the next slide of where did this come from, or where did we evolve to from the cyber insurance space? And I think the thing that we've got on the slide is a Frankenstein of coverage. And so as Louis talked about, when we first started to look at placing an insurance policy in the early to mid 2000s, there really wasn't a very good specific cyber insurance policy out there. A lot of the coverage was actually picked up underneath general liability, which is traditionally for slip, trips, and falls of individuals that may be coming into offices or to stores. It may be included within a property policy, which is clearly more trying to cover things like hurricanes and tornadoes and hail and rain and whatever else might actually damage the property. So as you can imagine, a lot of the underwriters, which are highly, highly qualified and have a high level of expertise in that particular area, they don't know a lot about cyber coverage. So as Louis talked about, underwriting meetings used to be 15 to 30 minutes, and there really weren't many deep questions that were being asked because, frankly, the underwriters didn't have any of the knowledge or the background to ask any of those intelligent questions. As you start to fast forward into what's this now mean for GL policies and property policies in the current day, it was several years ago that there was a term called silent coverage. And really, what silent coverage would say, if you had a general liability policy that didn't specifically exclude cyber coverage, then that silent coverage may actually apply. And as is often the case, the tie goes to the runner, or in this case, the policy holder. So the insured in that particular case may be able to make an argument that it is not specifically excluded, therefore it is covered underneath a general liability or property policy. But as Louis talked about at the very beginning, insurers are paying a lot more for ransomware claims, for the theft of PII, for malware, for expenses to defend lawsuits. And therefore, general liability and property carriers began to specifically exclude any sort of cyber related event to make sure that cyber coverage was only covered underneath a cyber insurance policy. And we liken it to the house. You can build the best possible house. You can put on all of the locks. You can do everything that you possibly can to secure your house from potential damage. But that doesn't mean that that's going to happen. So why wouldn't you also want to make sure that if you have applied all of your security metrics, that you go ahead and file a risk transfer or risk financing policy and go out and transfer that to another third party, an insurance company, to make sure that they can actually cover it should there be any damages assessed. The next point that we wanted to touch on is market corrections versus market shifts. And this is a big one, especially post-pandemic, as we start to come out of this and as we start to see the ransomware claim increase. Typically in the insurance market, you will see a market correction every 3 to 5 years. Those are typically caused by a large number of claims, a shifting in exposure, a specific industry that may be getting hit harder than another. And so there's small shifts of 10, 15, 20%. But there's no wholesale massive change to the industry itself. It's really just those small tweaks that insurance companies need to make sure that they remain profitable. What we are starting to see from 2019 and 2020 especially is that the cyber industry is no longer in a market correction. We are in a full stop reset of the cyber policies, the cyber coverage, and what we are going to see in the future is going to look a lot different than what we have ever had in the past. And that isn't going to include things like sublimits and other areas that we'll cover here in the near future. I'll pause to see if Louis, Mary, or JR want to add anything to the market corrections or the shifts before we go into the interest in the CISO. Hearing none. So we'll go into the CISO background. And this is also something that is extremely unique, where in the past, a mentor of mine used to joke that corporate insurance is not like your car insurance, where you fill out an application, you submit it to a whole bunch of insurance carriers, and off you go, you take your best quote and go on. That's not the case with corporate insurance, as you can imagine. However, what we have started to see within the last 5 to 10 years is a shift in focus, not only on underwriting the firm, underwriting what are the financials for the firm, what's the business look like, what's the projections and the outlook and the strategy look like, but now they're starting to ask questions of, we want to know, who is your CISO? What's their education? What's their experience? What's their certifications and their background? And they may start even going into who works within the CISO's operations, because we want to know, what's the bench strength look like should the CISO leave? Do you actually have people that can immediately maintain that business continuity from a CISO perspective to ensure that everything is handled appropriately? That is not something that has typically been done. It is now an immediate requirement that the CISO and multiple people from the CISO's office are going to be on an underwriting call to not only discuss their expertise and to validate what they're doing from a strategy perspective, but to also really answer in-depth questions about their background and their experience. It's fascinating to see. It will affect the amount of premium that an insured pays if they do not feel comfortable with the CISO's background or experience. Then it will result in an increase in premium. And typically, as risk managers, we will certainly find out about what that may actually be.
And Ethan, I would just share on the CISO's end of this, we used to be very comfortable with the insurance representative on the other end of the phone knew very little about cybersecurity, and they'd ask a few what we thought were easy questions, and on we go. And what we've seen, I've seen it personally as well as through our clients that are on these calls, sometimes asking us to participate with them, is the folks on the other end of the phone representing the insurance company are real credentialed cybersecurity practitioners that the insurance industry has gone out into the open market and hired. And so the caliber of folks asking these questions and the detail with which they understand the cybersecurity space is wildly different than it was a few years ago.
And that's certainly a lot different. JR, to your point, the expertise that we're seeing, that they're not just hiring experts to come in and do the underwriting after the fact. They're doing live underwriting discussions, underwriting meetings that may have lasted 15 or 30 minutes in the past are now lasting an hour and a half, 2 hours, 3 hours, because they really want to get comfortable with that risk before they put their balance sheet on the line to protect you. So let's move on to topic number 2. And JR, Louis, if either of you want to start with this and discuss ransomware, certainly happy to have you guys jump in, and then we can discuss waiting periods.
Yeah, I'll just throw out that it's certainly the number one topic that we get asked about regarding the threat landscape. You used to be asked, quite a few questions around, what are these different threat actors doing and who should I pay attention to, or maybe the attack of the day. But the camera has been zoomed out a little bit to the broader business context, and we're getting more and more questions around just, ransomware in general. It's a bigger concern. It's got everybody's attention. And so it drives a lot of the activities that, the security programs and IT organizations have to take because the business is paying attention. And of course, the financial implications are very real, much less theoretical than a lot of other cybersecurity incidents that we practitioners tend to hang our hats on when we're trying to secure budget. So certainly it's the number of attacks we obviously know, are increasing, the sophistication's increasing. And it's a hot topic. And unlike a lot of other hot topics in security, pick one, secure mobility or whatever, this one has not gone away. It still has remained a hot topic for a few years now.
Yeah, and I would also add that there's a bit of a visceral debate going on in the industry of to pay or not to pay. That I don't think that's the type of question we've had to answer in the past. And then secondarily, you also see scenarios where we're moving into uncharted territory where, this is a type of threat, specifically ransomware, that we're seeing now could impact the livelihood or the health or the, in some cases, the lives of individuals. So it's one of those threats that to be quite honest, the industry quite hasn't seen because of the polymorphic ways that it's impacting people and organizations. But other than that, I'll let you move on, Ethan.
Yeah, I think that the segue of to pay or not to pay, it's a great one. I think in the past, it was probably a decision that was made within the executive leadership team, perhaps with a board discussion. And now it is the CISO is often sitting there. The risk manager is also often sitting there because it's not unusual for an executive or for the board members to look and the risk manager and ask the question of, will our insurance company pay this? And where is our insurance company based? Because, if they're in London, it might be a different answer than if they're a US based insurance company. So those are really tough to decide. And as we start to look at the waiting periods, when we were talking about the various coverages earlier, it used to be that waiting periods were excess of 24 hours, which meant you couldn't actually really file a claim for damages until after those 24 hours have passed, or you're certainly not going to recover on anything within that first 24-hour period. The industry started to shift away from that and recognized that most companies are going to respond very quickly. So it dropped from 48 or 72 hours to 24 down to 16 or 18, and it dropped all the way down to 6 or 8, which was a very reasonable time period for an insured to wait before they could potentially start recovering damages. Within the last year, we are seeing insurance companies reassert the 24-hour plus waiting period, which, as you can imagine, certainly changes the potential financials that it may take for you to restore operations, to look at your recovery time objectives, your recovery point objectives, and make sure that you're able to maintain business continuity as quickly as possible. And of course, if the insurance company is hoping that you're going to be back up and running within 24 hours, then frankly, you don't really have an insurable claim, or one that may have very, very limited amount of recovery, which then leads into the changes of sublimits versus actual limits. And as you can imagine, an insurance company, as they start to look at placing policies, if we said, hey, we want to buy a $50 million policy, there's probably not going to be any carrier that's going to say, we will give you all $50 million worth of coverage. Instead, they're going to offer 5 million in layers or 10 million in layers, and you'll build that up to the 50. So if there's a $50 million actual limit, you may have 5 carriers that are providing 10 million worth of individual limits. In years past, the sublimits would typically have been removed. And that meant if there was a $50 million claim excess of retention, then you would have $50 million worth of coverage. That is not the case anymore, where if you have $50 million worth of damages, you then have to go back and look at every one of those coverages to determine what might be the sublimit. And if you buying 50 million, then that layer may only provide you 2.5 million for that particular event. So, having that conversation with your board of, we're buying 50 million of coverage, but because this was a very specific ransomware attack, we may only be able to recover 12.5 million from the insurance carriers because of the sublimits that have been applied. And I don't see that changing anytime in the near future because of a 400+% increase in the ransomware claims. So as we move on to topic number 3, notice of non-renewal, what do I do? And JR, I know that this is something that's near and dear to your heart, and that you certainly had clients that have experienced this and had conversations. So I don't know if you want to jump in, or certainly happy to take this.
Yeah, our experience really has been, especially recently, that this really kind of happens out of the blue, either as the result of the carrier detecting something in the environment. Maybe the organization popped up on the dark web. Maybe they were scanned, as I mentioned earlier. and the carrier found something they didn't like. And so, our clients come to us and say, I got this letter that said either, my policy is not going to be renewed or it's going to be canceled. And I think what's often difficult for our clients, and certainly we appreciate this as well, is these notices often don't take into account maybe why that service is running. Maybe it's a service that's needed for the business that a conversation would have uncovered. Okay, that service that you found when you scanned my environment, I had a web application firewall in front of it, for instance, that would have protected against an actual attack or whatever. And so really, it's been a blindside kind of an experience for a number of our clients.
Yeah, and go ahead, Louis.
Yeah, I was going to also add that it's what's unfortunate about it as well is that a lot of times a cyber insurance policy is a piece of an overall strategy. As you're still trying to build out your security program, you do have some risk in certain parts of your business, whatever it may be. And it does, as I mentioned earlier, help you to hedge your risk to a certain degree. It's tied to incident response plans. It's tied to your IR responder. It's tied to a lot of different things. So it's what's unfortunate about it when it does happen. It's, the rug is kind of pulled out from underneath you to a certain degree. And it forces you to react in a more, even more strategic way than you did when you put the policy in place. So it's just to, if it ever does happen, one of the recommendations I would make is to, follow the tentacles, so to speak. Make sure that when you put the policy in place and now that it's not there, what were those things that were tied to the policy that you need to at least build in mitigations for or, wrap your head around. But it's, I think the point being that just, take a step back, look at what you have to do if it does get canceled on you.
Yeah, and I think the policies, to JR and Louis' points, find out when your policy renews, have a deep conversation with your risk manager to determine. And typically what you can do is go at least 3 months back from the renewal date, is probably when the latest point that a risk manager should be starting on a cyber renewal. It's not unusual now for a risk manager to want to start asking questions a month or 2 months after the policy renews to make sure that they're staying fresh. It's something that Mary and I readily admit is not very good in the insurance industry. Is this we often get lulled into the sense of the policy's renewed. We now don't need to talk to the CISO for a couple of more months, when really we should be staying in touch with them. But if you do receive that 30 or 90-day notice of non-renewal, unfortunately, they are really poorly worded. It may just say underwriting reasons. It may just say industry. So there's not a lot of detail as to why it is that your policy may be non-renewed. It could be something that's very easy of they want to re-underwrite everything, which certainly is expected within a cyberspace. However, it would certainly be something that I would recommend, talking to your insurance agent, talking to your risk manager as quickly as you can to find out why has it been canceled? Is there anything specific that we need to do to remedy? But the process to actually do a cyber insurance renewal is a lengthy process. And you don't want to be caught off guard and by surprise for it and not really know what you're supposed to be doing, from that moment on. Perfect. Well, we had one of the questions is a perfect segue into topic number 4, which is incident breach response. And can I use other providers? So I'm going to turn this over to the rest of the team, including Mary. The question was about the concerns with the fact that insurance companies are often asking or forcing any of the insureds into using their hand-picked forensics teams, their hand-picked outside counsel, crisis communications, et cetera. So Mary's going to talk a little bit about the data security incident panel.
Yeah, so thank you, Ethan. Kind of just to back up a little bit, most cyber carriers do have a list of their approved service providers. They are determined to meet, their standard to assist an organization in the recovery and response of an incident. So if a provider of your organization's choosing isn't included in their approved providers list, we recommend, and it's important to seek pre-approval from your cyber carrier. And we recommend pulling together that list of providers at least a year in advance of your cyber placement or renewal. It can be a pretty lengthy process to go through. So having that year in advance will give them plenty of time to vet your providers and then respond to to be able to respond to any additional information requests on those providers. You're probably wondering, like, okay, so you're saying it's important to seek pre-approval, but what exactly does that mean, and what will these carriers be looking for? So carriers will ask, maybe for some more obvious and general information initially, such as, the name of the provider, the provider's website, maybe even some marketing materials that outline their business and specializations. But then they'll probably ask for some more detailed information. They're known to ask for, if you have specific individuals that will be servicing your account, how many individuals will be servicing your account? Can we have the bios of each of those individuals? And then also, what are their rates? What's your predetermined rate? They may even ask for a copy of the MSA, or at least a portion of the MSA that outlines the agreed upon services. They really want that reassurance that there are MSAs already in place with these providers, so that they're ready to handle and respond quickly when the incident is discovered. So one major benefit to having your vendors pre-approved is particularly important when it comes to the rate. They may approve only up to a certain amount of the rate. So it's important to understand what their limit is, so that there's no surprise when you file your cyber claim that you'll only recover a certain portion of those costs. And then kind of lastly, even though you may have these, primary selections of your providers, it's also good to have a list of secondary providers who can come in the event that your primary selections are unavailable or short of resources due to other incidents going on. That also gives them the reassurance that there's a backup, so to speak. So generally, key takeaway is, if your service provider is not within your approved list of providers, work hard to get that pre-approval well in advance, so that if there's anything that needs to be worked out and hashed out with your carrier in terms of getting your provider pre-approved, it's done well in advance.
Hey, Mary or Ethan, how long does that process typically take? So if I'm if I'm an organization and I have a few different types of providers that I have worked with for years and I want to get them added to the list, what's that process look like, and how long does it typically take?
The process, from my experience, and Ethan can certainly jump in, it took good 6 months to a year, especially if a carrier does not approve of your vendor. So having to work out, okay, we are not willing to move away from this provider. We have a great relationship with them, but understanding kind of okay, what is the carrier willing to cover, even if the provider is not on their list?
Yeah, I would agree. It's at least a 6 month process and could take up to a year. Some of that may be negotiation of the rates to what Mary discussed. Somebody may be charging X dollars, and that's 200, 300, $400 more an hour than what the insurance company is willing to pay. And then the insured has to make the decision, can we negotiate that further up, or are we comfortable bridging that amount, knowing that it's going to reduce the amount of recovery that we've got? In often cases, it is. Might be very specific to that industry, versus the insurance company is going to try to cover as many different industries with a blanket as what they can. And, and the question was a great one to say, like they've got their own that they want to use. And why is that? And it's because they probably have a duty to defend policy, which says that as soon as that claim is filed, it's the insurance company's claim. The insured has to now participate, but it's likely going to be the insured's or the insurance company's money. It's going to be the insurance company's reputation that then on the line, because they're going to have to disclose it. And so they're going to want to use whoever they want to use. However, to Mary's point, if you can get them on board and show them why it is that you want to use a very specific provider well in advance of your renewal, then it just makes the process so much easier should an event occur. We think that it certainly shortens the amount of claim that would occur. It's certainly seamless. And the argument that I think we would make as the risk managers and as the CISO operations is it's going to ultimately reduce the amount of the claim that the insurance company will pay, because there's efficiencies that we've created within the program.
And I would also say, just to kind of, I guess, wrap up this topic, is that it doesn't mean that you can't use other providers in each one of these categories. You just got to make sure that you're ready at some point in time to potentially hand those off to a third party. So a lot of times it's, if I have an IR provider, if I have, in our case, we're a managed security services company, we do it at times with different clients that may have something happen where we got to make sure that the transition is seamless from our IR function to their cyber insurer's IR function. So just make sure that, even if your provider isn't on the list, there are ways that you can use, but knowing that when something does happen, to Ethan's point, the cyber insurer's on the hook, and they're going to want to basically enforce the use of their providers. So.
All right. Key terms. So we've got a couple of minutes, and we want to make sure that we leave this open for the questions. But we wanted to put on a number of cyber insurance terms. Some of those we've already talked about, actual limits and the sublimit. We would say that sublimit is probably one of the most important areas right now, because it could actually limit your recovery. The other one would certainly be the waiting period deductibles. Because there may actually be a waiting period. There may actually be a deductible that is separate from what your actual deductible or retention is. So we would encourage you that if you don't have the answer, certainly go to your insurance expert so that you can ask that question and make sure that that you can actually identify what's included within the policy. I think it's probably worthwhile to even mention that as a CISO expert, it's probably good just to understand what's in the insurance policy. And we tried to make sure that we would actually walk through what's actually covered underneath the policy and what is not, with the CISO's office, just because sometimes it might be that surprise of, oh, we thought that was covered, and we're surprised that it's not. And some of that is, we didn't ask for it. Some of it might have been that it's just not ever going to be covered. And so, you just have to sort of take that for what it is and understand that insurance will cover as much as possible, but it's not going to cover everything.
Just a quick summary, and I'm not going to read through these, but I'd like to share that, prior to Louis introducing me to Ethan and Mary at 221B Consulting, there was so much about this industry that was bewildering, and so just wanted to share my takeaways, and I hope these are your takeaways too as you kind of navigate the world of insurance. I think the most important thing is to just not go it alone. We like to convince ourselves that we are the fastest changing industry on earth, and everybody else moves at a snail's pace compared to the cybersecurity industry. Wow, this insurance thing is changing quickly. And so staying on top of it and staying on top of cybersecurity is next to impossible unless you don't want to have a life doing anything else. So, having an Ethan and Mary in your life is probably a really good thing. Having an expert that you can lean on to just help you keep current. There tends to be a tendency with our business stakeholders that they'll ask us, do we have ransomware coverage? And yep, sure do, and then move on. It's on us to be aware of what specific limitations we have in our policy. What do we need to do to adjust those limitations, and is the business comfortable with those, and making sure that everybody in the room knows exactly what we're covered for before the bad event occurs. It's a great way to be on the looking for a job CISO board if we think we have ransomware coverage, and then we find out that we had a sublimit that wasn't even realistic for the business, and we ended up placing the business under exposure that they didn't know they had. We talked about the non-renewal notices and the panels that Mary discussed. These are really all things that require negotiation with the insurance provider. And the thing that I've learned here is it's really helpful it's kind of like being in a foreign country. The more of their language I can speak when I'm speaking with them, and the more of my language they can speak, the easier it is for us to come to an understanding of what we're looking to accomplish. And so I think as security practitioners, it's probably one more thing in the toolbox that we need to be cognizant of, at least be conversant in. And then when things get sticky, back to the first point, making sure that we have a partner to help us through the process. To Louis' point about handing off, this is one of those things where a lot of times when there's a ransom event or a business crisis due to any type of an IT or cyber event, some decisions are made very quickly. And sometimes those decisions, especially when you're the business, can kind of feel like you're having the gun put to your head. And one of those decisions is, okay, this has gotten really serious. We're going to switch IR providers and go with the one the insurance company recommended. And having really good processes for that what if I had to hand this off to another law firm, another PR firm, another insurance or another IR firm, because the insurance company is mandating that I do that. Just a little bit of prep work on the part of us security practitioners goes a really long way. And finally, just not making assumptions. There are so many terms in this industry that don't mean the same thing that the same term would mean to us in IT or security. And so making sure that we know what a term means and don't assume that we do is very important. So those are kind of some lessons learned that I'm very grateful for from the 221B team. And I certainly hope that the content here was helpful for you as well in your programs.
So we wanted to include a final resource slide. At the top, you can see that there's some key cyber insurance terms that Newsfire has put together to make sure that those are available. And then we also have our link to 221B Consulting. And if you have any specific questions that you would like to ask about cyber insurance or the insurance market in general, feel free to reach out to either Mary or I, and we're happy to help. we also provided some additional resources, some insurance events or insurance data, whether or not it's Advisen that has really good conferences that Louis and I have presented at, Net Diligence, Intelligent Insurer, RIMS, Business Insurance, and then we also include the IRMI glossary, which is the risk management guide for all things insurance terms, which is extremely helpful to understand what some of those terms may in fact mean.
All right. Thank you. Wonderful, everyone. That was a great presentation. And I did share a link to a PDF with the actual definitions of all those terms we had on the previous slide for everyone in the chat box. So feel free to click on that and download it. Everyone will also receive a follow-up email with the recording of the session. So if you don't want to write all this down, we'll get a copy of it via email afterwards. Let's see. So we also are really excited to say coming soon on our website, we're actually working with Ethan and Mary and putting together a very informative white paper on the topic of cyber insurance. So watch for that, and it'll definitely be of value. Also, I want to mention our next webinar coming up on May 12th. We'll be revealing our analysis of Newspire's quarterly threat report for Q1. So I want to share the link to you all for that in case anyone is interested in registering. Now we have some time for questions. So it looks like we have about 10 minutes. So let's go right to them. I do see some questions here. So thank you to everyone who has put their questions in. So David asked, how do the OFAC regulations impact whether or not an insurance company will cover a ransom payment?
Ethan, do you want to take that one, or do you want me to jump in?
You can jump in, yeah.
So I'll start. For anybody on the call that might not be aware, the OFAC is the Office of Foreign Assets Control. It's part of the Treasury Department, and they have set some basically some guidance on sanctioning organizations that pay ransom. That came about, don't quote me exactly on the year, but I want to say sometime around mid-2020, with the idea being, let's stop funding ransomware development by cutting off, the payment of ransom. But before handing it over to Ethan to talk about the insurance implications of this, I will say that what we've learned in the cybersecurity industry is it's really hard for the Treasury to sanction people for trying to keep themselves in business. And so we really haven't seen a lot of, really nasty behavior out of Treasury with regards to, to sanctioning organizations that have paid ransom. That may change. The guidance is in place. There are even specific lists out on the OFAC website for sanctioned organizations. Digital currency and blockchain make that so much harder to deal with and enforce. The one thing I will say here as a cyber practitioner is, if you're the victim of a ransomware event and you've engaged in this whole process of insurance, you've lit up PR, you've got counsel involved, getting law enforcement notified early is the very best thing you can do to prevent any kind of enforcement activity against you in the future. Letting the infrastructure security folks know, letting your local FBI field office know that you've had an event is probably, not to use the term in this webinar, but probably your best insurance policy against having another agency and like OFAC out of the Treasury Department come back and try and burn you for paying this a ransom. So with that, Ethan, I'll hand that. That's a great question, David.
Yeah, it is a great question. And as you can imagine, insurance companies, the very first thing that they do are going to look at the OFAC requirements. There's some SEC changes that have been proposed that are also going to make that a little bit more top of mind, where SEC has now said if there is a quote unquote material, and material is debatable, they've given a lot of scenarios around it. But if there has been a material cyber event, then you're required to alert the SEC within 4 days, or at least file a 8K within 4 days of finding out that that was a material event. As you can imagine, with that clock starting, and that ransomware event occurring, then your insurance company is certainly going to be looking at the OFAC requirements to make sure that they're not doing anything that could also get them in trouble. And like we talked about earlier, whether or not that's a Bermuda carrier, whether or not that's a London carrier, or whether or not that's a US carrier, they're all going to look and make sure that what they're doing is appropriate.
All right, moving on. We have a couple questions just specifically about 221B and your services. So if you could just clarify whether or not you're a broker like Marsh, or if you offer services in Canada.
So we would offer services in Canada. Our consulting is, whether or not it's in the US or Canada, we're certainly happy to help. Regarding the question, are we brokers? Yes, we are brokers. However, are we brokers like Marsh or Aon or Willis? No, we're not. We're not going to actually go into the market and help insureds negotiate and place that coverage. Instead, we're actually helping the insureds work with the CISO, work with Marsh to make sure that the insured is actually properly represented when they go out to market. As you can imagine, Marsh, Aon, Willis, other large brokers, Lockton, Hub International, whoever it may be, they're the bridge between the insured and the insurance companies. But the insured needs to make sure that they're producing the right amount of information. They're telling the story appropriately for what their business is, what their exposure is, what their risk management controls are. And we are here to help those insureds to try to figure out, like, what's this space look like? Are there better ways that we can have a stronger relationship with the insurance companies versus it just feeling more like a transaction?
All right, thank you, Ethan. Let's go down the list here. So we have a question from Lauren. Can you go into more detail about the term duty to defend?
Yeah, so there's two terms underneath most policies: duty to pay or duty to defend. Duty to pay will strictly say if, let's just say Louis has a insurance event, then Louis actually going to pay for that claim, and then his insurance company underneath a duty to pay is actually going to reimburse him for that. A duty to defend means that an insured, all they have to do is prove that there may be coverage applicable to that particular claim. And now it is the insurer's responsibility to step in and make sure that they're managing it. So that's why it's really tough. And it takes an extremely long amount of time to get an insurance panel pre-approved, because at that point, it's the insurance company that has taken over the handling of that claim. They're, of course, going to work in conjunction with the insured. However, ultimately, it is now the insurer's claim to defend that action all the way to final adjudication. So it's certainly something to ask on, is that something that we've got within our policy?
Thank you, Ethan. We're getting close to the top of the hour here. We've got about 2 minutes left. So I'm going to give one more quick question, then we're going to go ahead and have closing thoughts and wrap up for the day. So one question here is from Dave Scher. Are there specific incidents that are excluded?
It's a fitting question at this time. So what we are actually starting to see are potential, what we would consider to be war exclusions that are starting to see some denied claims as a result of that. And I think it's a really thin line that insurance companies need to be walking on. We experienced this in 2001 of a terrorism event was not covered. That was the real inception of the TRIA, Terrorism Risk Insurance Act. There are questions of, should there be a quote unquote CRIA, a cyber risk insurance act, where it would actually cover potential terroristic attacks from state sponsored countries. And so that is one that has never been really included until recently. But because of what's happening in Ukraine and with Russia, we are starting to see some insurance companies that are saying we're going to actually deny this claim underneath the war exclusion. And that's sort of the first time that we've seen that in this particular capacity.
Very interesting. All right, so that concludes our hour here. If anyone does have any further questions, reach out to us. You can email me at webinars@newspire.com, or you can contact us through our website, and or contact Ethan or Mary directly, as they extended that to all of you that are here today. Any closing thoughts really quick from any of our presenters today?
The last thing I would add is really appreciate everyone joining today. Hopefully, when we put a lot of this content together, we hope to educate and clarify and bring some clarity to confusion that exists on certain topics. And knowing Ethan and Mary, if you guys do have any specific questions, they are the de facto experts in this part of the industry. So by all means, reach out to them. But really appreciate everyone joining today. As always, the team at Newspire is able to help you guys out however you guys see fit. But hope you guys enjoyed the webinar.
All right, and we'll wrap it up with that. Thank you, everyone, and have a great rest of your day.